Michelle, what about the future of the US dollar? I want to throw up this chart looking at the greenback falling below the 100-day moving average for the first time since July. And it's interesting, we've yet to see that fourth quarter strength typical for the US dollar to emerge yet. Is this kind of moving on expectations that we will get that insurance cut from the Fed at the end of the month?
I think it's partly that. I think also because of some positive outlook on Brexit today. There was a spillover into some emerging markets and the euro rising. And I also know that from a political standpoint, there's been a lot of footballing in terms of the dollar and the desire by the administration to see a weaker dollar. So all of that is in play. But as you said, yes, today was actually a very important day for the dollar because it broke down underneath a major moving average for the first time in quite some time. But it'll be a question of whether or not they'll get follow through. But I do believe that if the dollar falls and the rates fall, we have other situations that we need to be looking at that could possibly emerge.
It seems like we started the week for US investors, at least, really going back to basics, back to fundamentals, looking at earnings, looking at companies and their inherent health. But it does feel like going forward, the distraction and the noise of Brexit and trade headlines is going to be too much for investors to be able to ignore.
Well, yes, and we've definitely been in a very unusual environment when it comes to social media because Twitter has moved the market 300 points up and down in a matter of seconds. And so what's really interesting right now is going back to the fundamentals is actually probably the smart thing in trying to eliminate the noise as much as possible, which is essentially what we've been doing, is really looking at phase of the market, as I mentioned before, the inside of the market. And what's been interesting is that the whole market has been in this giant trading range. If you really want to look at the S&P 500 and look at the SPY, the ETF, it's been trading really pretty much within a $15 to $20 range for months. And so a lot of the volatility that happens within that range is because of all of the headlines. So if you look at the longer term charts right now, what's interesting is the momentum on the weekly charts of the overall market has actually waned. Not on the daily charts, but on the weekly charts. So essentially, if you really want to understand what's happening going forward, you would have to see such a big move to the upside and maybe possibly a blow-off rally, but you would have to see that weekly momentum change from waning into getting stronger. And you would also have to see what, again, I'll call that inside of the market catching up. So today we did have some good movement out of the transportation sector. The small caps rallied, and so did the retail. That's a good sign, and that's a trend that we have to see continue in order to get really convinced that we will survive all these headlines and these constant moves up and down based on tariff talks, what's going on geopolitically with the Middle East, et cetera.